Hello, everyone. Hope you had a wonderful past two trading weeks. As last week I was unable to put out a public video for everybody. Got back a little bit late from my trip, and then the rest of the week just kind of got a little bit chaotic. So I was unable to step in and do a public video. So apologies for that. But let's just go ahead and jump into the dollar here. Been an incredible run, basically on the back of weakening in the euro as well as the pound, which gave the push to the upside here for the dollar. And the way it closed on Friday, it looks like there's a little bit of fuel left in this tank. But I do imagine that what we're going to see here is some pullback here for the dollar. So in essence, we're looking for a little bit of a push up here to maybe around 98.72 or so. She's going to try to consolidate along this level, and then looking for again another pullback to around that 98.30 level. A little bit of a bounce here, and then again pushing back into test that 98, and then we'll see where she can go from there. Probably a little bit of a bounce at that point in time as well to test that 98.38 ish break, and then again another push down into around that 97.90 area is what I expect to see here from the dollar in the upcoming week or so. Let's just go ahead and make that a little bit thicker, a little easier to see for everybody. So I'm just going to go ahead and just save that. And again, I do believe that we will see a little bit of a exhaustion on this move here, and then a strong pullback here around the 98.35 level. A little bit of a bounce back up to around 98.45, 98.50, and then again back down towards the next fib level around that 98.10 level, and then we'll see a little bit of consolidation, a little bit of a pop up, and then another failure is what I expect to see. So we'll see how that all comes together with the dollar. More importantly, let's go ahead and switch over to gold. Now, gold, again, it's been kind of all over the place, looking pretty good. It's trying to build a higher base, and I do believe that we do see, again, a lot more chop this upcoming week as, we have, a lot of multitude of factors happening. You have obviously a stronger dollar and dollar yen kind of looking like it might be topping out as well and starting to pull back a little bit. We've got the coronavirus, which is really impacting a lot of things. So what I expect to see here is from gold. 1575 looks to be like it's resisting near term at least. So as we start off the week, probably looking at some pullback heading into Tuesday, and then as we kind of bottom out around the 1566 range, look to have like a slower grind back up to challenge that 1575. And if we do get some follow through with selling pressure and indices and more fear starts to develop over the coronavirus, dollar pulls back, which has been lifting dollar yen and supporting it a little bit when it wanted to fall. Again, looking for gold to probably push back up and to test that 1580 to 15, if she can consolidate 1580, then looking at maybe like 1585 to finish off the upcoming week. So we'll see how that happens as well. Obviously, on this template, it's pretty much a naked chart. So again, we do have a little bit of trendline support here. We have a multitude of things on your lower level time frames, which will cause this to kind of chop around a little bit. And essentially, when you're looking at this chart, you should be seeing that we are looking at some kind of range bound action overall. I don't think we'll be going back in the 1564s, at least this week. There's some fibs that I'm looking at that kind of negate that move to the downside, but again, we'll see exactly how low she goes. But I'm looking at, like I said, around the 1566.70, 1566.50 area to be held as support, and then we'll start to see that slow grind back up, challenge 1575 again, and if we do get follow through, we should be able to break that, test the 1580 to as high as around the 1584, 1585 levels. Moving along here, let me just make sure I save that. Let's go ahead and move along here with crude oil. Now, a lot of people have been asking me about energy as a whole, crude oil, natural gas, and honestly, I personally have been staying away from trading either or crude oil or natural gas because I just don't like the way they look. I don't feel like it's a good environment, and I don't like to be actively, scalping, so to say. So I'd like to be in a position, be able to put my protection, stop loss in there, and then just ride out the wave, and then just take my profit instead of having to be in and out, in and out, in and out, so to say. So that's just my preferred trading. It's not to say that it's a bad idea to trade with crude oil or natural gas at this time. It's just that there is more weakness than I think that the market even realizes at this time, and that's going to come as a surprise to some. To others, like myself, not really. So as far as where I see crude oil going, we do have, price kind of chop around that 50-50, and a lot of people are starting to get really excited about 50-50 as being a bottom. I'm just going to go ahead and just say, be very careful because I actually have it going lower. I do have it retesting around 48 or so, down to as low as around 47.30 to 47.40 area in the near term. And those 50s are going to be, I think, in the near term looking at resistance. Now, somebody might be listening to my video going, well, what about OPEC? And they're going to be doing some cuts. Well, with this whole virus situation, and it's really been downplayed, I think, a lot more than it should be. China is basically grinding to a halt in a time when global economic recovery was already on life support. So what that means is that you have a lot less demand for your energy, whether it be crude oil, natural gas, etc. That's just building up those inventories and just putting more pressure on prices. So when you have a bulk buildup of inventories, whatever it may be, whatever good it is, and you want to get rid of it, you have to drop prices. That's just the laws of economics, really. So what I'm trying to get at here is no matter what OPEC really does here, and in order for them to really try to short term get a pop in oil prices, they would have to cut by several million barrels per day, which just is not going to happen. And even if they did after the short term pop, prices would still reverse back because, again, growth and demand are just not there at this time. So we're going to see this play out, and I could be wrong. We might get a little bit of a pop back up to 52 or whatever, and you know, I just don't see it as being a very high probability, and that's basically what I look at it. When I'm trading and looking at my charts here. So overall, I think that we're going to still see pressured prices for crude and natural gas, and I'll get to natural gas in just a second. Looking at a pullback to around the 48 level for crude oil. Probably see her chop around a little bit. She may even reach back up into the 50-50 level, but again, there's going to be a lot more selling pressure. And those of you that have been trading crude oil over the past week have noticed every time she tries to get up near that 52 level, 51.90 area specifically, the selling pressure just continues to come in. So that tells you something. You have to kind of read into the clues here. When you're trading and you're looking at the price action, it's really, really crucial to be paying attention, not just like where your trade is, but what the market is actually doing and trying to tell you. These little clues, they all add up to the bigger story, and you got to put it together. Otherwise, you're going to continue to get stopped out or sit in the red, for those of you that insist on not using stop losses. That being said, again, looking at that 48 level down to around 47.30 possible, which is basically the top of the wick here, around 47.10. So it's a little bit lower than I said. But again, 48 to around the 47.40 is what I'm kind of guessing that we're going to see the price try to stabilize a little bit before we get a little bit of a 50-50 pop or retest, if you will, and then ultimately looking at prices starting to break back down again and then retest those 42s in the coming week or two, maybe three. It's difficult to gauge on exactly how fast that will happen, but again, once that selling pressure realizes, or once the buyers realize that there is not going to be a real break and strong move up above that 50-50, that's when you're going to see the liquidation start really accelerating. So right now in the market in general, with the indices where they are, looking at metals and everything across the board, there isn't a real sense of panic out there yet, but there is selling outweighing buying as far as in the indices. It's very easy to see. You can look at the price to earnings ratios. They're extremely out of control. So be very careful out there. Let's move along here with natural gas to cap off this week's public video. And, again, with natural gas, where it's been trading, just very unimpressed. Just looking at this overall move, you could see, we pushed to that 187.2 level, kind of in a range there, broke below the range, popped up, and then again started a new range here. Now we're kind of capped below the 187 level. Yes, I understand we've gotten to the 190 level, but in essence, when you're looking at this, I mean, you just have to kind of use a little bit of common sense here. 190 is the base of the prior range. Other end of the range was up here near 1949. You've heard me say that about a week or so ago, I'm sure. So again, now that we're in essentially a lower range, you're basically looking at near the lows near 180. in order to get any type of upside push, you need to get back into the prior range, which is above the 190 to 1949 level, which so far, every time it's tried, I mean, just look at the size of those wicks. I mean, even a big green candle here still suppressed right back down and again pushed down. That 180, 84.7 level is crucial. She gives way again. It's going to be another retest of 180 and probably a breakdown further. So in looking at the larger time frame here, monthly time frame view, and zooming in as I showed, I don't even know how long ago at this point in time, but you can go back through my videos. I have them all listed. You can just, listen to your heart's desire and find out when I said that we would be going for a retest of these lows here back in 2016. Looks to be like that's still on par. So 180 breaks, then you know that essentially we're going to be testing down to the 170 level to as low as the 161 level. Probably chop around a little bit at that time. Should get a double bottom bounce there. How far remains to be seen. I would like to obviously see us get back up to 194.9 at least, maybe even 2. But again, it's all about what happens with that price action at that time. What's happening with this coronavirus? What's happening with demand? Is it picking up? Is it not? Is the weather playing a role? Is it not? So far, very warm winter here. For the East Coast, at least, we haven't really even had much snow, which is crazy. At least in the Philadelphia area, I think they've said that on Friday we only had about zero point 0.3 inches of snow, which our average is around a foot. So that goes to show you, we're just not getting that cold weather, and that's also playing, in the bearish aspect of natural gas as well as crude oil as well. So as we continue out in the future, we'll see what happens with the weather and such. But right now it looks to be like a higher probability of seeing those 170 to 160 range tests before we go ahead and see any type of substantial and I guess continuous rally here where momentum can actually start building and might see some decent short covering. But as of now, it doesn't look very impressive to me. Just to kind of go back to that 4-hour time frame view, you could see once again this 184.7 level is pretty crucial, and that's essentially the 78.6 from the 180 lows that we put in, and that 78.6 is a fib level. If you're not familiar with the fibs, then don't worry about it, but if you are familiar with the fibs, then again that 184.7 level off the lows here is the key level. So even if you're just taking a look at this just with your eyes, didn't mean to do that, and you can see that we have ourselves an attempt at trying to build and build and build, but we're starting to reach that 50% level, which is the bulls and bears are now fighting in a very thin area, and a break likely, in my opinion, from what I'm seeing, is going to be back to the 181 level. So we'll see what happens with that. If you're, not sure what just happened there, but if you're in it, just make sure you have your stops nice and tight. Otherwise, if you're long, looking for that pop back up over 2, good luck at this time is all I can say. If you're bearish and you're holding on for dear life, just make sure that you have your stop set in profit and let her continue to do her thing down to the 180s or so. That's basically the only way I would play it. But if you're not in it, not in crude, and just kind of trying to decide what to do as far as trades are concerned, like I said earlier, I'm not in energy right now. I don't think that it's just the right time as of yet. So kind of let the fog clear out a little bit, and then once we get that cleared out, then we can start taking advantage of some price fluctuations. But for now, I'd say focus more on your indices and your safe havens like your gold, your silver, and then as we start moving into more clear waters, so as to say what the general market consensus is. Are we going to start seeing panic selling in indices? Obviously, we're not going to be seeing panic buying at this time. So just a matter of tick-tock before we start to see drop. So that's all I'm going to say about that. If anybody has anything to add to what I've said, or any comments, feedback, anything to your heart's desire, you can leave it at the bottom of the video. You can send me an email directly, as some of you have, which I appreciate. And I do wish you all a wonderful and green trading week. I will be around the rest of February. In March, mid-March, I will be taking a trip, and then in April another one as well, but that's still a little bit of ways away. So green trades to you all. If you need anything, go ahead and just email me directly or leave a comment at the bottom of the video. Till then, watch yourselves, use your stops, and just steer clear of any market headwinds as you can, and just trade accordingly within your trading plan and strategy.